Hello traders, Gary Wagner here. Approximately 12:30 in Honolulu, 6:30 in New York on Tuesday, 29th day of June, 2021, and this is the daily report for gold and silver. We had strong declines in both gold and silver today, with gold losing about 1% and silver losing 1.5%. Gold actually traded down $30 at its low, closing down about $19 on the day. We'll talk about the root causes for today's move in our opening letter, as well as our charts and price board, and that begins now. Gold sold off strongly today, actually trading down $30 on the low. The low was $17.50 and closing down $19 at $1,761.60. Today's decline was aided by dollar strength. The U.S. dollar was up about 0.2%, a total of 20 points, currently at 92.08. But it was selling pressure by market participants as yields ticked up in U.S. debt instruments and strong forecasts for the upcoming jobs report on Friday that were the underlying factors which motivated traders and market participants to be active sellers in gold today. Silver lost almost 1.5% today, losing 38 cents and closing at 25.84 cents. Copper prices fell to a low of $4.20 before recovering, but still closing down by about a penny today at $4.27 per pound. While there wasn't any major technical chart damage on our daily charts, and that is because the major chart damage has already occurred, we can see the weekly trend line that we have drawn from a series of lows, those lows being the low that occurred at the beginning of April, as well as the low that occurred about the second week of June. On our weekly chart, we can see that we have definitively broken below that price point on a closing basis, with the upcoming jobs report forecasting about 700,000 new jobs being added. If it comes in on target, we could see a further demise. Of course, if it comes in way off target, we could see a rise in gold. That, however, is less likely, in my opinion, than to see prices move lower. But where could they actually go to? And for that, we'll need a daily chart. This daily chart clearly illustrates the tumble we witnessed in gold ever since the end of May, beginning of June, when we had a failure for gold to move above the 1900s. It did hit a high of about 1920, however, was never really effectively able to close above $1,900 per ounce on a closing basis during this period. We can see that right here. It fell through the 61.8% retracement, then the 50% retracement. Most recently, it declined below the 38.2% Fibonacci retracement level, and that comes in at approximately 1785. With that in mind, the next real level of major support does not occur till about $1,740. That is based upon the 23.6% Fibonacci retracement. We have got good historical data illustrating that this particular price point, this area, proved to be a point of resistance when we hit this double bottom and attempted to move higher from there. And it is exactly the price point of the highs that occurred in April before the market took off and traded to 1920. With today's strong decline of $19, that matches up almost precisely with the lows that came in today at 1761.80. You can see that right here. If we get a defined continuation, our target is 1740. We remain flat with no active trades in gold or silver. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.